Hello and welcome to Market in a Minute, January the 15th, 2026. KSE-100 slipped below its 10-day exponential moving average today after several warning sessions, marking a clear short-term pause even as the broader uptrend remains in place. Let's take a closer look. All right, so this is where we stand, and 1113.48 point loss for the day. And finally, after so many warning sessions, you would have noticed that the market closed below the 10-day exponential moving average. So the index is no longer above all important moving averages. The broader trend is still intact because it is above the higher moving averages. Other than that, volume once again below par, consistent with corrective consolidation rather than distribution. Momentum cooling from overbought conditions. RSI still remains above the neutral zone, so there is a room for a hike after pullback. MACD tells a similar story. Momentum has rolled over modestly, reflecting loss of upside thrust rather than trend reversal. But ADX tells us that trend strength remains elevated, though recent pullbacks suggest digestion within a strong trend. So the VIX trend, as you've noticed, is still intact, as confirmed by this. So our verdict for this day, crisp and precise, is that KSE 100 is undergoing a controlled pullback within a strong uptrend. The slip below the 10-day EMA marks short-term cooling, not trend damage, with 178,800 and 177,000, this area around the 20-day exponential moving average. Now the key zone to hold to keep the bullish structure firmly intact. So tomorrow will tell whether this was a fake breakdown or a genuine short-term pullback. So stay tuned. Thank you.